Hi, it's Mind Crypto here. I hope we're having a wonderful morning, afternoon, evening, wherever you are in the world.
Remember, this isn't financial advice. Always do your own research.
Mind Crypto here. I hope we're all having a wonderful day. First and foremost, we look at those crypto bubbles and we are ranked 39 with a 1.12 billion market cap with a price of $92.64 and the 24-hour volume slightly down from yesterday, 11.78 million. We are up 0.1% in the hour, 0.5% in the day, and 0.7% down in the week and 7.8% in the month. But we don't worry about that. We are long-term holders and we love it. But anyhow, let's have a look at what's going on with Quant at the moment. So price currently in descending channel on the one-day time frame, says Bullshark Trading. We could see the price wick take out the sell side liquidity and then start to move to the upper trend line of the channel. Cautious to the fact that there is a large fair value gap below this set of liquidity and support. Quant pairing with BTC, price trading at lower end of the accumulation box, and we will be looking to add to our positions around these levels. Buy orders set at the sell side liquidity levels. 2023 is seen as a year of accumulate, and we can expect price to range across all of crypto assets. So this is a global thing across the crypto market and the crypto space. So it's just not personal to Quant. So we need to get that in our heads. Please remember, none of this is financial advice. I am not a financial advisor, so always do your own research. Now, I saw this tweet from Construction Trader Eve, fellow compadre in the quant sphere. He says, the platform model for the digital pound, the central bank is the Bank of England. The API layer is Quant Overledger. The payments interface provider is XRP, XRPL, Ripple. The users is us. That's how simple it is. And I think lots of people try to complicate this. You've got to remember, Quant is just 3 lines of code. It is really that simple. And if we have a look at this, so we see the central bank, and this is where people really confuse it, absolutely confuse it. So we see this, a fast, highly secure, resilient platform that provides simple payments functionality. This would not provide the bank any access to users' personal data. Then we have Quant. The API layer allows private sector intermediaries to connect to the core ledger. Blocks unauthorized access, only regulated entities can connect. Something like XRP. Intermediaries, payment interface providers, and external service interface providers. Authorized and regulated firms providing user-friendly interfaces between the user and the ledger. PIPs provide interaction relating to payments, while ESIPs provide non-payment related value-added services. And then us, the users, register with intermediaries to access the digital pound. Now, this is really, really simple. And a lot of people tear the arse out of what's happening. Now, I'm going to get into that in a moment because I think what people are trying to assume is that there is a one size fits all. But it's not going to be the case. This is a massive market, and everybody likes different things in their pot. And one thing's for sure, these institutions are not going to use one. Why? Because they cannot control that one. They're going to use bits and pieces to build the framework because they can control each of these smaller entities. And if something breaks, they can remove and replace. And that's the way I see the world. And that's the way I see institutions. A lot of other communities will have you believe it's just going to go on their blockchain with their interoperability, with their liquidity and everything else. Now, yeah, that's just wishful thinking. You got to think they're at the early stages of this whole project, and we are at the start of it, the inflection point, which is what we're going to talk about now. I see this from Cyprus Demanicor, which I found very, very interesting. And he says, here's a video that they tried to take down. Massive confirmation, big money is coming. They don't want you to know. I peeled this video and got it back. Here it is. He says, yo, listen up, State Street representative confirms big money is coming. And as you'll notice, that is also JP Morgan's Scott Lucas sitting there as well.
So it's clear that this market needs to come from the big players, and I think that especially here in this audience, people that have been working on it for several years have been a little bit, okay, why is it so slow? And I think that the point where we're here today is different from where we were a year ago. At this point, correct me if I'm wrong, you guys and your peers are coming in a big way. It's just happening at the pace that it's coming, and to make regulators comfortable with it.
I think that's right, and I think it's accelerating for sure.
So, as you all heard from that video intro, the representative from State Street confirming that the big players are coming. Ladies and gentlemen, I'm showing you all synchronicity and key vocabulary. Do you all remember the CyberX researchers found back on September 11, 2023? The London Stock Exchange Group went on to say, head of capital markets at the LSEG earlier today told Financial Times the London-based exchange had been examining the potential for blockchain-powered trading venues for around a year and had reached an inflection point. I've shown you all multiple times in the past that these elites use the same vocabulary across the board. Listen to this representative from JP Morgan mention the same exact terminology, and listen to this representative from Goldman Sachs say the same exact thing. They mention the terminology inflection point.
Investors realize that actually digital bonds are cheaper than regular way bonds, and then they kind of go, actually, I'd like to buy more of those, less of these. How do we get? And then you start to get the inflection point where that market develops. And
you know, I think one thing that's everybody knows about Goldman Sachs is that you're really good at timing the market, and in this specific market, it looks like you're quite early. And do you think you're quite early? Is it now the right time to deploy? Where do you see the horizon? What is the timeline that you see realistically for an institution such as Goldman Sachs to be able to be, you know, in production with a tokenization solution?
Yeah, interesting. I'm hoping we're not too early. I would say, actually, I feel we're at this inflection point. So,
ladies and gentlemen, this video breakdown is only from August 10th, has 35 freaking views. This video is only from a month ago and has 126 views. This is physical proof that nobody is tapped into this information. However, now you watching the CyberX platforms, you all know that these big institutions are for a fact coming. They're openly telling you all this in their panel discussions that nobody is watching.
Absolutely, nobody is watching. And these particular videos are out there, but they're not being watched. And essentially, we can see these big players, JP Morgan, Goldman Sachs, other big US banks, literally on this talk, telling it all, laying it all out, what's happening, where they are. And this is where I found part of the video, and JP Morgan's head of DLT markets, Scott Lucas, regulated markets will be on this technology, and it won't be done on a single platform like some communities will have you believe. Patience. I'd be happy with just $1 trillion of that running through Overledger. So let's have a listen.
regulated markets will be on this technology, using it in a sophisticated way within a decade. You know, and what a reasonable proportional could be anywhere from the 10% mentioned previously to anywhere sort of sub 50. I don't think north of that is irrational. But I think quite clearly we've got our own platform. We've had that for a few years. We've done a lot of experimentation, development in that. JP Morgan's, again, not one homogeneous entity. There's lots of different businesses within that. And within the markets business, our responsibility is to be able to provide liquidity to our clients across a range of different markets. That's not going to be done on a single platform or even a small handful of platforms. Certainly not the way the structure of the market is evolving. Are we going to have a regulatory imposition of sort of everyone get on DLT? No. Do policymakers buy that? No. Are they going to agree in the short term? No. So what's really going to happen is what we're seeing at the moment is a sort of federation of experimentation across different institutions to say, like, I can offer this for my clients, I can offer that for my clients, and then eventually sort of clients are saying, well, can you guys just pair up and offer that across so we get more liquidity? We're at the beginning of that phase now. And so I think that's where we start to see interoperability. So I think that's sort of the shape of where we get to, but federated experiments that do real things with economics associated with them where we'll start, and the market will evolve from there. It's a competitive market.
And like I said earlier, they won't be using one single platform. They will be using a variety. And the reason is they control it. It's as simple as that. Who will they be using? Well, we know the Bank of England are using Overledger Quant Network. And why? Because it's absolutely simple, as I've explained. Now, some communities will have you believe they're going to use all of their technology, whether it be interoperability, whether it be the on-demand liquidity, they will mix and match to find what works for them. That's the way I see it. And there you go. If Quant can grab that $1 trillion of trillions and trillions of dollar market, I think we have got an amazing opportunity here. Remember, please subscribe. Please hit that notification bell so that you don't miss any further videos. All the best, and I'll catch you later.
Remember, this isn't financial advice. Always do your own research.